A lot of entrepreneurs, specifically the ones on the international level, may sometimes really face the issue with opening of bank accounts. I heard so many stories and so many times people come to me saying that it's really nearly impossible to literally open a traditional bank account, specifically even when it comes to startup companies. Now, what do we do in this case? Apart from having the traditional banks, lucky enough in the payment system, in the financial sector, we also have available other ways how you can also set up a payment channels. You can set up your payment accounts and you can start receiving the money and making payments for your supplies. These are a bit more simple ways. Most of them are online, actually all of them are online. And the thing is that, apart from traditional banking, if you cannot just simply go to your banker, to the actual building where your bank account is and ask for a corporate account for your company, then you have another option to go online. With the online accounts, we need to separate between two types of the accounts you can open for your business. These are corporate accounts which are opened by electronic money institutions or payment service providers. So what's the difference between those two types of payments? This is what we are going to discuss now in a few minutes. Two types of these online accounts, and how do I know which one is the best? Now, I want to really mention that both of those accounts are really online and you can set them up easily. The main difference is that electronic money institutions are the platforms which provides you with a payment wallet. So something similar to your account where you can receive the money, you can keep those money over there, and you're going to have the access to the platform, and you're also even going to get your debit card. So you can actually even go and make the payments in the shop. You can use your debit card to actually make purchases online. So this is very similar to bank account. However, when it comes to the difference between electronic money institution and the traditional bank, the electronic money institutions are not part of scheme protection. So that means that the balances you keep on your account are not under the scheme protection for your deposits. So if something happens to the EMI, unfortunately, you're not going to be able to actually recover the deposits the same way how it is with traditional banking. So that's the key literally element to when it comes to all those online payment providers. Yes, they do provide a great option for your business. However, when it comes to the protection of the balance on these accounts, this is actually not part of it. So when it comes to the second option, what we are talking here about is payment service provider. Payment service provider is a more simpler payment option than the electronic money institution. As we mentioned, the key points with electronic money institutions are that you have your wallet, similar to the account, you have access to the platform, you can make the payments, you can keep the money on that wallet, and you're going to have your debit card. With the payment service providers, these are slightly different since they provide payment solutions only. See it this way. Literally, you have the platform on which you're going to be able to receive the money. You're also going to be able to make the payments. However, it's a platform which processes the payments. So that's the difference between the electronic money institution and payment service providers. Payment service providers will literally provide you a platform where you can open the account. However, you won't be able to get a debit card, and neither you're not going to be able to keep your funds on that account for a long period of the time. So it's not like with electronic money institution, you can actually hold their funds how long you want. With the payment service provider, they will tell you what's their limit, because Each and every payment service provider has their limits. These usually vary between a couple of months to up to 6 months. So yes, somewhere in between 3 to 6 months. So as you see, it's a bit shorter period within a year. So you need to make sure that the funds you receive to the account within these 3 months, that balance will actually exit the platform, the payment platform. So that's the main benefit of such a type of account. This is something specifically for businesses, for e-commerce, for example, for online gaming businesses, where the fluctuation and the frequency of the payments is actually regular. So this type of account, the payment service provider account, will not be really suitable for any investment holding companies where you hold an investment for longer periods and you receive dividends once 6 months, unless you just want to literally, for that holding company, you want to receive the dividend and pass on the whole dividend to your personal bank account. If you have that option, this can be really great. Otherwise, the payment service providers accounts are really just suitable for frequent payments and for a daily operating company, for a fast-paced company, where the payments actually come and go on literally on a daily basis. So these are the two options you have when it comes to online services or online payments. I will see you in the next video. In the meantime, like the channel, subscribe, and I will see you in the next.